Hi, this is Ron Janish. What we're going to do here is take a look at the market over time and perhaps give you an idea of how the course methods can be used in an effective manner to help you get a clear sense of what's going on in the market at any given time. So let's take a look at this. This was a chart here that I sent out this week. It's a 5-minute chart on the Russell, just showing the median line sloping up. And those of you that have taken the advanced program, that have been to the seminar, know that, or even if you know the manual material, know that right here in this pattern here you have what we refer to as a condition that's covered under the Janish golden pivot rule that's in your manual. So and that's number one. Number two, something very interesting to notice in this pattern here is that you, on this way down, which is a nice action move on the way down, prices did something really kind of cool. They went down, up, down, up, down. That's the obvious. What's not so obvious is that if you draw a line from here to here, you have an upsloping line, and if you draw a line from here to here, you have a downsloping line, and then this one is even further down. Now, this particular pattern is what Andrews called an EP. There are certain patterns, and this is one of them, this is probably the best known, that have special rules connected to them. And let me show you what I mean by special rules. What you can do with this pattern here is you can draw the action-reaction lines. And Andrews contended that prices turn exactly at a reaction line within ticks. Okay, so let's see if this really happened, right? Let's move on a little bit. And as we can see here, prices went up, came down, did a little micro reaction, possible buying opportunity for somebody else who wants to get in, added defined risk, and then moved on up here to the median line, which also happened to be the second reaction line. Okay, so at this point, if you look at here, you could say that, yeah, prices went to the ML, yeah, prices went up to a reaction line. And if you know the golden pivot rule, you would know that this is a highly probable place for prices to turn down. And so we have the Janish golden pivot rule that tells us this is a reaction, a valid reaction point, giving you an opportunity to take appropriate action here. So let's say you entered the market over here, and you got rid of some of those lines, those reaction lines, and drew something else. And what you notice is that prices, if you draw your median line using your high, low, high, you'd see that prices broke the H line, which they do. A typical action pattern on a very small scale here is prices breaking the median, breaking the parallels, and also breaking the warning lines. Notice they went up to the golden warning line, and hey, stall. Sometimes they go past it, sometimes they don't. Watch for the stall. This doesn't always happen there, but that's a place to give you an idea. All right? Because remember, we have the concept that if prices are not able to make it past a far parallel that was shown in the other videos, particularly the one covering the low in November of 2008, then watch for a probable end of an action move. Also, this helped you find the top, right? So here you have things telling you that, several things telling you that this is probably the end of the move. Okay, and here we can see with a whole bunch more data with 20/20 hindsight that, yeah, it was the end of the move for a while. And down she went, and then what we see here is as it went down, once again, these lines function rather interestingly as reference points for support and resistance. And if you're using the golden pivot rule on a very small scale, you could see that right in here you had another entry opportunity. Okay, and then down she went. And I remember I mentioned in another video that during an action move, and this is a nice little action move down here because it's breaking the lines and going down, that prices have a tendency to um, give you several entry opportunities that have reasonable defined risk along the way in an action move. And this was one of them. And then there was another one later on right about over here. We'll take a look at that in a sec. Okay. As we move on down, we can see that prices broke the H line, went down past the first warning line, went back up to it, and once again, this particular area here is covered by the Danish golden pivot rule. And then prices, sure enough, went down to the warning line number warning line number 2, the golden line that you see down here, right? So as price so when you define things in terms of actions and reactions, remember that it depends on the time frame you're looking at, and it depends on probably the easiest thing that helps you in the long run is remembering the Danish golden pivot rule to help you find the interesting points to take notice at where you're very likely to have reaction points. Okay? I thank you for your time, and please go to the andrewscourse.com site. Make sure you're signed up for a live seminar. In addition to the live advanced seminars, we also have the live pro seminars. And you may wonder what we do during the seminar. Well, one of the things that we do is we cover a lot of things that are not in the manual and really need a one-on-one type situation to explain it, even though it might be 1 to 10 or 1 to 20. It's a more personalized approach. And so what we do is, the first thing we do is spend a couple of hours with a PowerPoint presentation that I do that cover these action and reaction points and how to determine where they are and how to label them and all that kind of stuff. Remember, the information here is given for your educational experience. They're never meant as trading advice. So go with that, and do get some charts, get some nice quote.com software, especially let them know that you want the 5.0 version. They'll try to push on you this 6.0 thing. It's okay. 5.0 has things that the 6.0 doesn't, and that is very important. And the most obvious thing that it has is it has a lot of intraday data you can play with and go for. 6.0 doesn't have that. So that makes a huge difference. In terms, they'll tell you that 6.0 is better. It might be, but 5.0 gives you the real database. And without the real database, it's like, what for? So anyway, I thank you for your time, and we'll see you at the seminar.